Hello guys, today we're going to be talking about the top 5 mistakes people do when investing in multifamily. Let's begin. One of the biggest mistakes I see people do is that they decide to buy a multifamily in a bad area. And the reason this is a bad decision is because you're going to attract lower quality tenants. And you might be wondering, why do people decide to buy multifamilies in bad areas when there's plenty of options of multifamilies in good areas? And the reason is that properties in bad areas are a lot cheaper, and they might be in the same condition and they're the same size. People just focus on that purchase price and they decide to buy a multifamily in a bad area when it's a better idea to spend maybe $50,000 or $100,000 more and buy in a good area. For two reasons: you're going to attract better quality tenants, and the most important reason is that you're probably going to be able to get more for that rent. So you're getting better quality tenants and more for rent. So you're actually going to be making more money if you buy in a good area. The only issue is that your initial investment is going to have to be a little bit more if you buy in a good area. Another big mistake that I see people do is that people decide to buy a 2-family instead of a 3-family. And why do people do this? Well, the reason is the same from my last point. A 2-family is usually more affordable than a 3-family. So people decide to just buy a 2-family thinking that they're going to make more money and that it's a better investment, when in reality it's not. And let me give you an example. A 2-family in Bridgeport, Connecticut is going to run you around $300K. A good 3-family in a good area is going to run you about $400K. Now, the 2-family, you're probably going to be cash flowing around $1,000 a month. If you just decide to spend an extra $100K, which is money usually borrowed from the bank, you're actually going to be making from $500 to $1,000 more every month. And if you do the numbers, then buying the 3-family is usually a better investment. Another issue with buying a 2-family instead of a 3-family is that a 2-family, if one of the tenants for some reason stops paying, now you got to cover some of that mortgage. With a 3-family, your mortgage is covered with 2 rents. So in theory, you could always have one vacant and you would be breaking even or around even. So when you see the numbers from that perspective, it is a lot smarter and safer to buy a 3-family, because you could always have one vacancy and you will still be breaking even. Now this one really depends on what type of investor you are. If you're buying for appreciation, well, this doesn't apply to you. But a lot of people are buying for cash flow in the wrong areas. Here in Connecticut, you can buy a 3-family in Stamford, Norwalk, but the purchase price is so high that with the rents coming in, you're going to be breaking even, or you're going to be losing a little bit of money every month. Now, if you're buying for appreciation, you know what you're getting into and this doesn't affect you. But I see a lot of people buying for cash flow in these areas and it just doesn't work. The purchase price is too high, so your mortgage is too high and you're not profiting from the rents coming in. And the reason that people like buying in Stamford, Norwalk, is because they're very desirable areas. They're nice to live there. But at the end of the day, if it's an investment property and you're not going to be living there, then you should focus in buying in let's say a city that has a negative stigma, but you can still buy in a good area. Not the whole city is a bad area. There's very nice areas in the worst cities. For example, Chicago, it has beautiful places. New York has beautiful places. Bridgeport, Waterbury has nice and safe places. And it's just about knowing that market. That's why you should get a realtor that knows what they're doing. Because you might get a realtor that's just trying to sell you a house. So you get all excited about this house that's low price. It looks like it's in a good condition. It might be in a good condition, but the area is bad. And one thing about a house is you cannot move it from one place to the other. So it's always better to buy in a good area. For investors focus on cash flow, I would tell them focus in buying in a good area, in a bad city. That way you get an affordable price and the rents are going to be a lot more than your mortgage. And what I mean by a lot more is from $1,000 to $1,500 usually. Unless you find a really good deal, then you're going to be able to cash flow over that. Now this tip is crucial, and this is one of the biggest mistakes I see people do. The biggest mistake is that they don't screen their tenants. They just put anybody in there and then they just hope for the best, and that really usually never works out. And it's simple logic. If I have bad credit, then I don't care if it gets even worse. It's already bad. But if I have good credit, then I'm not going to want to mess it up. So of course that I'm going to pay rent, more likely. Nothing's 100%. I'm more likely gonna pay rent and I'm more likely gonna be a better tenant. So you should always screen your tenants. And there's different ways you can go around this. You can ask them to fill out an application where their credit is run. It tells you their criminal past, if they have any, their evictions, if they have any. It tells you everything that you need to know to make an informed decision on if this is someone that you want living in your property, because at the end of the day, it's your property, so you should take care of it. Now this is a big one because we're buying cash flow properties so we can make more money. But a big mistake I see people doing is that they just use the money that the house is cash flowing and they go waste it, and they don't put any money aside for fixes. When you buy a property, you gotta know that the property eventually is gonna have something that breaks down. So what happens? If you were saving money and putting money to the side, there's not gonna be an issue because you already put money especially for that case. But if you wasted all the money and now let's say you're not working or you don't have that much money in your bank account, then that's when it becomes an issue, because now one of your houses has an issue and you don't have any money to fix it. So you should always put some money aside. I would say about 30 to 40%, which is more than enough, but it keeps you on the safe side, and there's nothing better than staying on the safe side, especially when you're dealing with people's homes. That's also a very important point I want to make. Investing in multifamilies, you gotta realize that you're providing people homes, so you gotta take care of them like you would take care of your own home. Thank you guys so much for watching the video. If you guys enjoyed the video, be sure to leave a like, comment, and subscribe. And if you have any other questions, just let me know in the comments, or you can give me a call or message me. I'm gonna leave my phone number, my email, and everything else where you can contact me around here. If you're looking to buy in this area, definitely give me a call. I can help you out. I see a lot of people buying bad investment properties, and I just wonder if the people buying them didn't do their numbers or if they just trusted someone blindly. And I always recommend my clients to do both. I'll give you the numbers that I made, and then you can do your own numbers, and hopefully those numbers align. Thank you guys so much for watching this video, and I'll see you on the next one. Bye.